Are you ready to discover the ultimate secrets to earning money through smart investments? Well, you're in the right place. Welcome to our channel, where we explore the world of lucrative assets that can supercharge your financial journey. In today's video, we'll uncover the top assets that have the potential to generate wealth and put you on the path to financial freedom. Whether you're a seasoned investor or just starting out, we've got valuable insights and strategies that will help you maximize your earnings. Welcome to the General Finance channel, where we're committed to helping you take control of your finances. Are you tired of feeling overwhelmed by credit card debt, unsure of how to create a budget, or intimidated by the world of investing? Don't worry, we've got you covered. Our channel is dedicated to providing you with practical tips and insights on credit management, budgeting, and investing. We upload new videos 3 to 5 times per week, so you'll always have fresh and valuable content to help you achieve your financial goals. If you like what you see, make sure to hit the like and subscribe button, as well as the notification bell so you never miss out on our latest uploads. Let's start our journey to financial freedom together right here on General Finance. Asset number 1. Shares with dividends. Shares with dividends are considered one of the most profitable investments because they provide investors with regular income in the form of dividends. Dividends are a portion of the company's profits that are distributed to shareholders on a per-share basis. Investing in shares with dividends allows investors to earn both from potential capital appreciation and from the dividend payments, making it a dual income strategy. When you invest in shares with dividends, you become a shareholder of the company and are entitled to receive a share of the profits generated by the company. Companies that pay dividends typically have a stable financial position, generate consistent cash flow, and have a history of distributing profits to shareholders. Suppose you invest in shares of a well-established consumer goods company that has a track record of paying regular dividends. The company has a strong market presence, a loyal customer base, and a history of steady revenue and profit growth. As a shareholder, you receive dividend payments on a quarterly basis. Let's say the company pays a dividend of 50 cents per share each quarter. If you own 1,000 shares, you would receive $500 in dividend income every quarter, totaling $2,000 annually. In addition to the dividend income, you also have the potential to benefit from the capital appreciation of the shares. If a company's stock price increases over time, the value of your investment will grow, providing you with potential capital gains when you decide to sell the shares. Investing in shares with dividends can be particularly beneficial for income-oriented investors who prioritize regular cash flow and a steady income stream. Dividends can supplement your investment returns and provide stability during periods of market volatility. Asset number 2. Digital assets. Digital assets and technology have revolutionized the way businesses operate and market their products. The advent of computers, the internet, and digital platforms has made it easier for businesses to reach a wider audience and conduct transactions online. This shift has opened up new avenues for growth and transformed traditional business models. With the rise of e-commerce, businesses can now market and sell their products digitally, reaching customers across the globe. Digital platforms provide a cost-effective way to showcase products, offer personalized experiences, and engage with customers through various online channels such as websites, social media, and mobile apps. The accessibility and convenience have significantly expanded the market reach for businesses of all sizes. Compared to the past, when technology and knowledge were limited, businesses had to rely on physical stores, traditional advertising methods, and face-to-face interactions to market their products. This approach often had geographical constraints and required substantial resources. With the advancements in technology, businesses can now leverage digital tools and platforms to create targeted marketing campaigns, analyze customer behavior, and optimize their strategies in real time. Moreover, the availability of data and analytics has empowered businesses to make informed decisions and adapt their marketing strategies based on consumer insights. Through digital assets like websites and social media, businesses can gather valuable data about customer preferences, demographics, and purchasing behavior, enabling them to tailor their offerings and improve customer satisfaction. Asset number 3. Active mutual funds. Active funds and mutual funds are investment funds where the portfolio manager actively makes investment decisions to outperform the market or a specific benchmark. Unlike index mutual funds that aim to replicate the performance of a particular index, active funds rely on the expertise and research of the fund manager. They conduct in-depth analysis, research various securities, and use different strategies to select investments they believe will generate higher returns. The goal of active management is to outperform the market or achieve better returns than the benchmark index. The process of active fund management involves thorough research and analysis, security selection based on the manager's insights, portfolio construction to align with investment objectives, and ongoing monitoring with necessary adjustments. By actively managing the portfolio, the fund manager aims to capitalize on investment opportunities and navigate market conditions to generate superior returns. Investing in active funds offers the potential for higher returns compared to passive strategies like index funds. However, it's important to consider that active management often comes with higher fees, and not all fund managers consistently outperform the market. Therefore, investors should carefully evaluate the fund manager's track record, investment approach, and performance history before making investment decisions. Asset number 4, business. Businesses are considered assets with significant potential for growth due to their ability to generate profits and create value. When you own a business, you have the opportunity to leverage your skills, knowledge, and resources to meet market demand and drive growth. However, starting and running a business is not without its challenges. It requires careful planning, research, and execution. Some of the challenges entrepreneurs face include securing funding, developing a competitive business model, building a customer base, managing cash flow, and navigating legal and regulatory requirements. It takes a great deal of time, effort, and dedication to overcome these hurdles and establish a successful business. Passion plays a crucial role in creating and sustaining a business. When you're passionate about what you do, you're more likely to persevere through challenges, stay motivated, and continuously innovate. Passion fuels your drive to succeed and enables you to make the necessary sacrifices and commitments to see your business thrive. Asset number 5, index mutual fund. An index mutual fund is a type of mutual fund that aims to replicate the performance of a specific market index, such as the S&P 500 or the Dow Jones Industrial Average. These funds are designed to provide investors with broad exposure to the overall market, allowing them to participate in the returns of a diversified portfolio of stocks. Investing in the stock market is considered a great way to achieve a high return on investment because historically, stocks have outperformed other asset classes over the long term. While stock market returns can be volatile in the short term, over time, they have shown the potential for significant growth. This makes investing in stocks an attractive option for investors seeking higher returns and willing to take on some level of risk. Mutual funds, including index mutual funds, pool money from multiple investors to create a diversified portfolio of securities. The fund is managed by professional portfolio managers who make investment decisions on behalf of the investors. In the case of index mutual funds, the objective is to closely track the performance of a specific market index. The way index mutual funds work is by holding a portfolio of stocks that mirrors the composition and weighting of the target index. The fund manager does not actively select individual stocks, but rather aims to replicate the index's performance by holding the same stocks in the same proportions as the index. This passive investment approach helps keep costs low as there's no need for extensive research or frequent trading. For example, the Vanguard 500 Index Fund is an index mutual fund that seeks to replicate the performance of the S&P 500 index. By investing in this fund, investors gain exposure to a diversified portfolio of 500 large-cap U.S. stocks. The fund's objective is to match the returns of the S&P 500 index, allowing investors to participate in the overall performance of the U.S. stock market. Asset number 6, growth shares. Growth shares, also known as growth stocks, are shares of companies that are expected to experience rapid earnings and revenue growth in the future. These companies are typically in their early stages or operate in industries with high growth potential. Growth shares often reinvest their earnings into expanding their business, developing new products or services, and increasing market share, rather than distributing dividends to shareholders. Investing in growth shares involves identifying companies that have the potential for above-average growth and investing in their shares with the expectation of capital appreciation. This approach focuses on the company's potential for future growth rather than its current profitability or dividend payments. A great example of a growth share is Amazon.com Inc., or Nasdaq Amazon. Over the years, Amazon has consistently demonstrated exceptional growth in revenue and earnings, driven by its dominance in e-commerce, cloud computing services, and expansion into various industries. Investors who recognize Amazon's growth potential early on and invested in the company's shares have seen significant returns on their investment. Let's consider a scenario. Suppose you've identified a small technology company that has developed an innovative software solution and is gaining traction in the market. The company has a unique product offering, a strong customer base, and a talented management team. Based on your analysis, you believe that the company has the potential to disrupt the industry and experience significant growth in the coming years. You decide to invest in the company's growth shares. Over time, as the company executes its growth strategy successfully and expands its customer base, the demand for its shares increases. As a result, the share price increases and your investment appreciates in value. If your analysis proves accurate and the company achieves its growth targets, you may realize substantial capital gains on your investments. Asset number 7, Bitcoin. Bitcoin has the potential to generate wealth over time due to several factors that differentiate it from traditional currencies. One key aspect is its limited supply. Unlike government-issued fiat currencies which can be created and printed at will, Bitcoin has a finite supply capped at 21 million coins. This scarcity helps preserve its value and guards against inflation. As central banks and governments print more money to stimulate economies, the purchasing power of traditional currencies can diminish, leading to a decrease in their value over time. In contrast, the limited supply of Bitcoin makes it an attractive alternative store of value. The increasing demand for Bitcoin also plays a significant role in its potential for wealth generation. Bitcoin's value is driven by market dynamics and investor sentiment. As more individuals, institutions, and businesses recognize the benefits of Bitcoin and adopt it as a form of payment or investment, the demand for Bitcoin increases. This increased demand can drive up the price of Bitcoin, potentially leading to substantial returns for early adopters and long-term investors. A notable example of Bitcoin's price increase is seen in 2020 when its value surged significantly. The COVID-19 pandemic and the resulting economic uncertainty led many investors to seek alternative assets, including Bitcoin, as a hedge against traditional markets. This increased demand, coupled with limited supply, resulted in a rapid price appreciation. Asset number 8. Financial education. Understanding personal finance is indeed one of the most powerful resources available to an individual. It provides a solid foundation of knowledge and skills that can have a profound impact on one's financial well-being. When we're educated about personal finance, we're equipped to make informed decisions regarding our money, investments, and financial goals. Having a strong understanding of personal finance allows us to effectively manage our income, expenses, and budgeting. We can develop strategies to save, invest, and grow our wealth over time. By being aware of concepts like compound interest, diversification, and risk management, we can make sound financial decisions that align with our long-term goals. Education in personal finance also helps us navigate through financial challenges and make informed choices during critical moments. Whether it's dealing with debt, planning for retirement, or making major purchases, being knowledgeable about personal finance empowers us to assess the options available and choose the most suitable path. Moreover, understanding personal finance promotes financial literacy and responsible money management. It helps individuals develop healthy financial habits, such as saving regularly, avoiding unnecessary debt, and planning for the future. These habits contribute to long-term financial stability and security. Asset number 9. Bonds. Bonds are debt securities that represent loans made by an investor to a borrower, typically a corporation or government entity. When an investor purchases a bond, they are essentially lending money to the issuer in exchange for irregular interest payments and the return of the principal amount at maturity. Bonds are considered fixed-income investments because they provide a predetermined stream of income to investors. An example of a bond is a U.S. Treasury bond. These bonds are issued by the U.S. government to finance its operations and are backed by the full faith and credit of the government. They are considered one of the safest investments available, as the likelihood of the U.S. government defaulting on its debt is extremely low. Bonds can also be bought in index funds or exchange-traded funds, or ETFs, that track a bond index. These funds offer diversification across a range of bonds, providing investors with exposure to a broader bond market without needing to individually select and manage multiple bonds. Compared to stocks, bonds are often seen as less risky investments. Bonds have fixed interest payments and a specified maturity date, which provides investors with more certainty about the return they'll receive. Additionally, in the event of bankruptcy or liquidation, bondholders have a higher priority claim on the assets of the issuer compared to stockholders. This priority status gives bonds a level of security that's typically associated with lower risk. Asset number 10. Index funds. Index funds and mutual funds are two popular investment options, but they have distinct differences. Mutual funds are actively managed by professionals who actively select and manage the fund's holdings in an effort to outperform the market or a specific benchmark. They rely on research, market analysis, and their expertise to make investment decisions. On the other hand, index funds are passively managed and aim to replicate the performance of a specific market index, such as the S&P 500. Instead of trying to beat the market, index funds seek to match its performance by holding the same securities in the same proportions as the chosen index. One major advantage of index funds is their cost effectiveness. Since they follow a passive investment strategy, index funds have lower expense ratios compared to actively managed mutual funds. This means investors pay lower fees, which can have a significant impact on their long-term returns. Additionally, index funds offer diversification benefits. By tracking a specific index, they provide exposure to a wide range of securities, spreading the investment risk across different companies and sectors. This can help mitigate the impact of poor performance from individual stocks. Another advantage of index funds is their ability to deliver consistent performance over the long term. While they may not outperform the market, index funds tend to provide returns that closely mirror the performance of the chosen index. This can be beneficial for investors seeking stability and a more predictable investment outcome. Additionally, index funds are transparent as their holdings are based on publicly available indexes, making it easier for investors to understand what they're investing in. Congratulations! You just learned about some incredible assets that have the potential to make you earn money. By diversifying your investments and exploring various avenues, you can secure your financial future and unlock opportunities for wealth creation. But remember, this is just the beginning of your journey towards financial success. If you're hungry for more valuable insights on building wealth and making smart investment choices, be sure to subscribe to our channel. We'll continue to bring you exciting content and expert advice to help you navigate the world of finance and maximize your earning potential. As billionaire investor Warren Buffett once said, the best investment you can make is in yourself. So keep educating yourself, stay curious, and be open to exploring new opportunities. The path to financial prosperity starts with knowledge and the right mindset. Thanks for tuning in to today's video on the General Finance channel. We hope you found it informative and valuable. Remember, we'll be posting new videos on the channel 3 to 5 times per week, so make sure to hit that subscribe button and turn on notifications so you never miss an update. And don't forget, we want to hear from you. Leave your thoughts and feedback in the comments section below. Is there a particular topic you'd like us to cover in a future video? Let us know. Thanks again for watching, and we'll see you in the next one. Keep building that financial savvy, and we'll be here every step of the way to help you on your journey to financial freedom.